Good morning, everyone. Today we are joined by Chris Byrne, the CEO of Legacy Minerals, with ASX ticker code LGM, Lima Golf Mike, an ASX listed explorer making waves in New South Wales with a major gold, silver, copper resource at its Drake project and big name partners like Newmont backing its exploration. Good morning, Chris. How are you going?
Yeah, great and fantastic to be here on the show today.
Excellent. Well, look, Chris, let's start off. For those who don't know Legacy Minerals, can you give us a quick version on it about what is your company about? Where are your projects, and what's the big opportunity that you're chasing here?
Sure thing. So Legacy Minerals is a New South Wales focused exploration company. So um, the east coast of Australia. And the reason why we're set up here in New South Wales is a fantastic exploration and mining jurisdiction, home to Australia's largest gold mine at Caddy Ridgeway, 50 million ounces gold, 10 million tonnes of copper.
Yep.
We're the largest ASX listed explorer on
Hmm.
the Australian Stock Exchange with over 8,000 square kilometres of tenure. And we're really here in New South Wales looking for gold, silver, copper, and critical minerals. And it's a jurisdiction that's home to these big deposits, home to some very, very active exploration from juniors like us, as well as majors, including Newmont, Anglo Gold, Fortescue, etc. It's a really, really prospective jurisdiction to make discoveries and to mine.
Excellent. Well, look, you've just recently announced a 1.2 million ounce gold equivalent resource at Drake. I mean, like, how important is this milestone for your company?
It's a significant milestone. This is our first resource that we've reported.
Mm-hmm.
We followed off the back of that with a scoping study, which, if you look at the progression of exploration prospects, there's always a lot of risk at that early stage. Are you drilling these results? Is that result going to, translate into a resource? Is that resource going to be economic? And what we see with that 1.2 million ounce gold equivalent resource, which is mostly gold and silver,
Mm-hmm.
that this is really de-risked the project in terms of, we're at that resource stage. The scoping study, is telling us that that it's economic. So we really see it as a strong indicator for shareholders and potential investors. It allows a good benchmark to look at, the ounces that we've got in the ground at the moment and what our market cap is and what that other companies with, similar resources are. It's a really, really easy way to sort of demonstrate the upside case for investors in legacy minerals.
Excellent. Well, look, I mean, I guess, how does that change the confidence with Legacy, and how does it really shift the story going forward now that you have, announced a 1.2 million ounce equivalent?
Yeah, so it's obviously worth a lot of money. At the current Aussie Australian dollar gold price at north of,
Hmm.
5,000. So the in-ground value of the deposit is pretty phenomenal.
Mm.
What it means for us is it really sort of sets a strong benchmark underneath the valuation of the company and really
Yes.
provides a diverse, de-risked exploration portfolio that we've got. A project that's advancing rapidly based off a lot of historical work. But then we've also got these other more higher risk greenfields discovery opportunities for the rest of the portfolio. So it really gives us a quite a unique, balanced exploration and sort of pre-development approach.
Thank you for that outline there, Chris. Well, look, the numbers from your March scoping study looked really strong, actually. And that was just using a very small part of that resource. What kind of upside, I mean, could come from this second stage you're working on now?
Yeah, sure. What we did with this stage one scoping study is really use a lot of the historical parameters from a previous bit of work that was released in 2020.
Hmm.
Um, because we grew the resource so substantially in our latest MRE that was delivered a couple of months before,
Hmm.
um, that was a 75% growth from the previous mineral resource estimate. And what
Okay.
it sort of meant is that the mining parameters that fed into that scoping study were only using 17% of the total 1.2 million ounce gold equivalent. So 200,000 ounces is in the scoping study. Another million ounces gold equivalent is not included in the scoping study. And just based on those 200,000 ounces,
Hmm.
at the 5,000 Aussie gold price, we're looking at a project that has an NPV of close to 400 million Aussie dollar IRR 140%, and importantly, really strong fundamentals in terms of these, all low operational costs. So really a robust project from that perspective, and again, only based on 17% of the MRE. So a lot of upside in what we're planning for the next stage, which is a broader stage 2 scoping study.
Sure. Look, Chris, given the fact that a lot of our, investors and members aren't, geologists or engineers, with this current where this announcement has been made, has is this like a greenfields exploration, or has there previously been other companies on the site already?
And this is very much a brownfield site. Again, when we look at our portfolio and the diversification that we have across projects, um, Drake has been mined. It's one of the earliest mining centres in Australia. So 2 years after the first gold was found in Australia, they were up there at Drake, mining away, from about 1853 till 1990. So we're looking at an environment that has seen a significant historical gold, silver, and copper production across a very large area. So yeah, it is a brownfields environment, and that gives us, confidence that
Okay.
if it was economic and it was making people money 50, 100, 150 years ago, that certainly at today's gold prices and with today's technology, that there's potentially a very profitable sort of asset at the Drake
That's very
project.
promising to hear indeed. Well, look, Drake has delivered some seriously impressive drill hits, including over 12 meters at 48 grams per ton gold and 2,500 grams silver. What kind of high grade, what does this like high grade mean for the project's future?
Yeah, so what it means, then that's from 16 meters. So we're looking at something that's close to surface.
Hmm.
At Drake, and what you sort of want to see, I guess, in projects, they fundamentally change. The future viability is we're looking at the mineralization, gold, copper, silver at surface. It's not hundreds of meters deep underground. That makes it economic to
Yes.
extract, as a general rule of thumb. But when you see these very high grade zones, it's what makes our existing sort of that's fed into our existing financial model. But it tells a story that there's a very deeper picture here that we haven't yet looked at. And when I say deeper, we only need to be talking about 150 meters is deep on this project, compared to a lot of the historical work. So often you see the surface expression of these deeper roots, and those roots, from what we can sort of see, look very promising. So there's certainly a lot of, when you see this high grade gold, silver veins surface coming to surface, gives us confidence that down the track we can look at potential further gold and silver resources that come from a potential underground mining scenario.
Right, I see. And look, you've already got a lot of infrastructure in place at Drake, roads, tailings dam, even a freshwater supply. I mean, how much of all of that goes to really reduce your upfront costs and speed up your development?
Yeah, it's a pretty fantastic sort of position to be in. The sunk capital cost across the project is significant, and we sort of estimated there could be 30 million in sunk capital in the existing site infrastructure. The historical exploration would probably be another 50 million in today's terms. So that's just 50 plus million that we don't have to ask our shareholders to fork out. It gives us a real head start. And importantly, when we're looking at the potential future development of the project, is that we've got that sort of, that starting block, that, we've got these foundations already built for us to sort of proceed to the next steps of evaluating the project. Where certainly puts us ahead of the pack in that regard.
So you've got really already the two critical pillars, right? You said so the cost of extraction is quite low and you're surrounded by critical infrastructure.
Correct. Yeah, and that's it can be as simple but important as being connected to the grid. That saves a lot of operational overhead costs.
Mhm.
We're not talking about an extremely remote located site, so nearby. We're 40 to an hour drive away from the main Sydney to Brisbane railway line. So you're very well connected to skilled key workforces as well. So yeah, we see these as extreme sort of benefits that play out in our favour at this project.
I'm smiling. Look, there's been talk about the Drake project sitting inside a huge mineral system, similar to some of the biggest discoveries in Australia. Can you explain to us in layman's term, like what does this really mean, and how much more do you think there is to find?
Yeah, and this is what really first brought us up to this region when
Mhm.
you mentioned before one of our other joint venture partners, Newmont.
Yes.
They farmed into one of our other projects in central New South Wales, and that really got us excited around these types of systems, potentially unrecognized or not being explored. And we searched around, and about 3 months after that joint venture with Newmont, we'd signed the exclusivity to acquire this project. And that was looking at the exploration opportunities. So not talking about any of these studies or the mineral resources, just looking at a system that has an incredible footprint from historical workings, some significant high grades of gold and silver across it, that really give the indicator to us that, hey, this could be a really large, tier one type of system, similar to that, that we're searching for with Newmont elsewhere in New South Wales.
Right. And you've already mentioned it, you've got some big name partners involved. We talked about Newmont and S2 Resources through those joint ventures. I mean, what do these partnerships really mean for legacy, and why should everyday investors really care about this?
Yeah, it's a really good point. But we've got a unique aspect in legacy that we've got these 100% owned projects like the Thompson and the Drake project and these joint ventures. What the joint ventures give is exposure to discoveries that are both non-dilutive and in a great risk-sharing model. If anyone tells you that exploration is not, a risky game, they're not probably telling the truth. It is risky. You want to partner with the right people that have the expertise in making discoveries and
Mm-hmm.
developing them, like Newmont, as well as with S2 Resources, led by Dr. Mark Bennett, major shareholder Mark Creasy. They give a lot of credibility to the geological concepts that we develop in there. What it really means for us as shareholders is that, we get these, exposures. Yes, we get diluted down to across all those joint ventures to roughly a 20% ownership at the back end. But 20% ownership of something that can be like a Cadia Ridgeway, a massively significant global deposit, would mean a substantial amount for our shareholders. And that sort of discovery exposure, we saw it play out very, very nicely for Greatland Gold recently, in terms of being a minority partner in a project and now, a multi-billion-dollar market cap, through that joint venture style arrangement.
I guess it's similar to walking amongst giants, right?
It is, and you get to leverage their expertise and their skills. And they've obviously done it before. It's not their first rodeos. But yeah, it certainly is it's a great sort of approach to the way that we can conduct our exploration.
And I'm very curious. Obviously, these relationships are not easy to cultivate. So, I want to go off script a little bit here. Like, how did you get exposure to, these two big names, and then eventually, obviously, this collaboration?
Yeah, it fundamentally does boil down to the geology. Does when you're looking at a project or an exploration prospect,
Mm-hmm.
what are the indicators? What are the pathfinders? What are the key sets of ingredients that, take, for example, Newmont, they mine low sulfidation epithermal systems across the world. They've been doing that for the decade. So they've got a set of criteria that they need to sort of see that ticks their boxes. Um, so it's about trying to, they won't do it on any old project. You need to be looking for the right types of systems and actually having those,
Mm-hmm.
those early indicators that, yep, we're in a target-rich environment and we think we've got a chance for this type of system. And it's the same thing with S2 resources or Earth AI, that the geology tells a type of story and that Legacy as a company is also then open to these partnerships as a model that sort of sees, hopefully a win-win for both parties in terms of the discovery being made and everyone benefiting from it.
So it sounds like there's real strength and merit in the project first before that collaboration needs to happen.
Correct. Yeah, the fundamentals need to be there. The grade, needs to be there. And again, the type of system needs to be sort of the right fit as well.
Excellent. I mean, look, aside from Drake, you've also got exploration underway across multiple other projects in New South Wales. What else should investors keep an eye on from your portfolio? We've spoken a lot about Drake, but maybe the other unsung heroes in your portfolio?
Yeah, well, certainly the one that's worth just mentioning briefly is Thompson. One of the largest gold copper exploration licenses in New South Wales, covering 5,000 square kilometres.
Mm-hmm.
That's exploring for a completely different solar mineralisation, intrusion-related gold and copper. We're
Mm.
currently out there at the moment, preparing, for the recommencement of this second drilling campaign that we've got underway out there. And we're quite excited about that because unlike Drake, that has been, explored for, and mined for 150 years, we're looking at an area that's really only had one company ever drill it back in 2011. Um, and so the opportunity to make a new significant discovery in a geological terrain that is one of the most underexplored regions in Australia is
Mm-hmm.
quite exciting. It's real sort of frontier exploration. So that's certainly the news flow from that is something that our shareholders should be looking at.
Sure. We've spent a bit of time obviously talking about gold, copper, silver. You mentioned critical minerals. What's your take on critical minerals and what does Legacy, I mean, we're going off script here, but what is Legacy's take on that and your positioning towards that space?
Yeah, so with these types of systems, they're often very polymetallic in nature,
Hmm.
which is really fantastic. If you're looking at a gold-only project, you're fully reliant on the value of that gold to make your project work. But
Yep.
when you're looking at systems that contain gold, silver,
Mm.
lead, zinc, and copper, it's where we really see that that polymetallic value that comes into it. It obviously opens doors in terms of different ways to attract investment as well as increased government support. So we really have not put ourselves in that back that the niche or the corner around critical minerals or gold and silver only, but we really take a quite a agnostic view in the portfolio that we have a lot of belief in the fundamentals around gold and silver, but importantly, a lot of these projects with their polymetallic nature present a lot of critical minerals upside as well.
Right. Thank you that very much, Chris, for that. And look, just to wrap up, what are the big milestones or news flow we should be watching for over the next 6 to 12 months with Legacy as this story continues to play out?
Yeah, so we're looking at drilling at Thompson. So we're
Mhm.
targeting world-class intrusion-related gold systems out there. We'll also be actively working at Drake, so
Mhm.
looking at the potential for a stage two scoping study, and that'll sort of start to really add some sort of significant production figures behind what that might look like. Um, we're also looking at doing some more greenfields exploration work at Drake as well, so complementing that the study work that we're doing up there, and then we should see across the rest of the portfolio, active sort of exploration programs, under our joint venture partners. So a lot of work upcoming or drilling upcoming with S2 Resources at Glen Logan, other partners including Earth AI, leveraging their artificial intelligence at another one of our projects, looking for PGE, platinum, palladium group elements at a Fontenay project. So expect to be, we're expecting it to be busy 6 to 12 months with a lot of high impact catalysts on the way.
I'm expecting that too. Well, look, Chris, I thank you so much for your time. I really enjoyed myself today. I guess the next question, the final question I had is if any of our investors or our audience have any questions about legacy, would it be okay? I'll get them to send those questions through to us. Info at sharesandvalue.com.au or info at eastcoastresearch.com.au, and we'll forward them onto your team to respond accordingly.
Great, that's no worries.
Tremendous. Well, I'll see you in probably 6 months then, Chris.
Sounds good. Looking forward to it.
Thank you.